I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, good morning on this interesting Friday.
Bob, some people have said the market right now kind of echoes the rise through the markets back in the 80s, does it?
Yeah, the one that began in 1982. No, this is... the world seems to go on long bull markets in commodities. That was till 1980. And that took a year or so to turn that one down. And that was also with a bear market for stocks and with a tremendous bear market for bond prices. Like, nominal interest rates went up like you wouldn't believe. The long-dated U.S. Treasury got up to something like 15%. And the Canadian long bonds got up to 19%. So, but what that was the end of a powerful move in commodities. And throughout history, at least since the 1700s, when you have one of those end, it ends with a sharp crash in commodities. You know, Vancouver house prices, the bid just disappeared in an instant. But anyways, that then sets up the next great mania, which is in financial assets. So the crash down to 82, and this is where, gosh, I was doing presentations to institutions then with an overhead slide projector, and one of the conclusions I threw at them was that no matter how much the Fed prints, stocks and bonds would outperform commodities. Well, that was controversial, and indeed this is what happens. You go into a world of inflation in financial assets after the terrible world of inflation in consumer prices and wages and everything. So then that more or less has been on since. You had a rising commodities up until 2008 when the price of crude got up to 147. And that was in June of 2008. And gosh, the dynamics, Jim, on that move are incredible. Generated upside exhaustions and all sorts of technical stuff. And as I wrote it at the time, that with the weekly readings we were getting, that would suggest a cyclical bear market for crude oil. And then wrote that if the reading comes in on the monthly number, then it would be a secular bear market for crude. And indeed, that's what we got. The monthly number came in, and we got the secular bear from 147 all the way down to 26 in early 2016. So to get to the question that this is looking like 82 coming out of 1982, this is the start of what could be a post-bubble contraction. And the model, gosh, it shows up distinctively with the huge commodity boom to 1920. And then 9 years later, you had the 1929 bubble. And then you go back a previous couple of generations, and you had a huge commodity boom conclude in 1864, and a pretty good bubble conclude in 1873. So there's the 9 years from the commodity boom top, which was the biggest one since 1920, was in 2008. And then 9 years you have the financial bubble. And if you take the high in New York for the New York Stock Exchange Composite, That was in January 2018. And then there's a world index of stock exchanges without the U.S. in it. And that set its high in January of 2018 as well. So you then have a pretty good handle on these things. When you've got the commodity index by the month, which is available for 1920, and you count out the months to the peak in the stock market in September 1929, it was 9 years and 5 months. And then if you do the same thing with the high for commodities in, I think it was June of 2008, counted out to the high in January 2018, and it comes out 9 years and 7 months. So this says that we're early stages of a post-bubble contraction. And when I look at the major characteristics of a great financial bubble, they were more evident in 2017 going into 2018 than in the bubble of 2007 or the bubble of 2000. So I think history is saying early stages of a post-bubble contraction.
Do the current stock market charts show that this is its own unique beast and we shouldn't compare it to other past markets?
That's a good question, Jim. There are a couple of things. As I say, the main characteristics on the bubble were there, classic characteristics. As we've had quite a few of the characteristics of the initial liquidity problem, and it has been milder than, say, the fall of 1929. But this, as you recall, Jim, we used it to say that during the summer we were advising to build liquidity because there'd be a liquidity problem in the fall that could clear in November or perhaps as late as Christmas. And it cleared going into Christmas. Now, the thing that's missing, and we've written this a few times, is that with the change in the credit markets, like the yield curve and credit spreads, it's been dramatic enough that some big players somewhere are probably offside, but there's been no announcements of insolvency. So the change in the markets, perhaps dramatic enough that there should be big players offside, but perhaps they're just holding it all together until the markets are tested yet again. But we're looking for, at the moment, the bounce out of the disaster into Christmas has been quite vigorous, and it needs a rest or correction. But generally, I think that the stock market, industrial commodities, and credit markets can be favorable into March, which could be, that's a seasonal time when things are generally okay. So that's what we're kind of looking for now. But I think one has to know in detail all of the features of the great financial booms, either in commodities or in financial assets throughout history, which, as I said, that takes us back to about 1700. And then one has enough information at hand to make the comparison. And our conclusion is that the bubble was a classic, and the transition to the contraction has been on the path, but with some distinctions that there's been no major disasters reported yet.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Bob Hoye. Bob, the U.S. Job numbers came out, and they had over 300,000 people added to the workforce when they expected only 185,000. Does this show that the U.S. economy is still expanding?
It looks pretty good tone, but you've got a dramatic slowdown in China, weaker industrial commodity prices suggest that the global economy is not that robust, and I don't follow U.S. job numbers anyways, or Canadian. That's all stuff for economists. But I think the next into this quarter is going to be very interesting in the financial markets. And the one thing about it is that the markets will tell us what's going on. And what we do is, with the full knowledge of all the previous bubbles, you have a path to follow the direction of the markets and at least make an informed guess as to what's going on. There was one 2 weeks ago where a large hedge fund manager, widely followed guy, and I can't think of his name at the moment, he thought that this was the equivalent of 1937, where you had the 1929 boom and bust, and then the rebound out to 1937, and that you had the big boom to 2008. But hey, this is so different to 1937, you can't believe it. So again, I would say I think he's done some work in history, but he hasn't done enough. So, and what we do is you have the historical path, and let's call it probability. And then within this, you're going to have some intermediate moves where the markets get oversold, like at Christmas, and overbought, like now. And you've got the technical means to measure the degree of overbought and oversold, and it makes it a much friendlier world for both investors and traders if you've got a handle on the longer probabilities, and then have the means of measuring and determining opportunities as they come along. It makes the investment scene a whole lot friendlier than it would be where one is being constantly surprised. So here I am in the financial markets, having been in them for a very long time, and enjoying it so much that you got no idea to retire, and it's always a fascinating game. And then the other thing fascinating out there, you've seen some of the headlines about some cold weather in the middle parts of the continent, and all of a sudden they're on the bandwagon, and they're talking, like Drudge Report the other day had headline all day long that Chicago was minus 75 degrees Fahrenheit. But of course what they were doing is reporting the wind chill factor. So the actual temperature, I think, was probably like 21 below Fahrenheit. And that's the figure that should go into the climate record, or into the temperature archive. But then the wind chill factor is going to vary from place to place. And what happens is that the media use it for sensationalism, even though maybe 90% of the reporters are global warmers. But when you can get onto a sensational headline, why not grab it? But as I said, while the lows down into that area were as low as they've been for 20 or 30 years, the calculation with the wind chill thing is specifically to grab headlines, and you don't want to be out in the cold. Like you mentioned, you're in the Peace River and you know what cold is, and I said, well, I spent a winter in Winnipeg, and I know what cold is. But, well, actually, Jim, the low one when I was in Winnipeg was 49 below Fahrenheit, no wind chill thing. And you said you had a 60 below one in Priest River?
Yeah, minus 65 Fahrenheit.
Ooh.
And that's when things like propane becomes a liquid, and your gasoline in your car is a jelly, and you have to use a blowtorch to warm up your gas tank, which is a pretty exciting process if you don't do it right. And once you turn your car on, you can't turn it off because the moisture in the exhaust system will freeze and crack the entire exhaust system.
Oh, my God.
Yeah. So, and it's also cold enough that you pull your scarf down and spit, and it goes crack!
Yeah.
And freezes in midair. That's what we used to do for fun when I was like 9 years old.
Oh, well, that's a great entertainment.
Oh, yeah, isn't it? We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, oil is trading at around $54. Western Canadian Select at $45. So the gap has been greatly reduced. Is Alberta right to say it won't cut back production now as much as they said they would?
Yeah, it's a game it's an evil game being played by control freaks to try and control everybody's life, and they've maligned the energy business. They've convinced themselves, plus a whole lot in the media, that renewable energy is cheap. That's wind turbines and solar cells. And they're convinced that even the manufacturing of those things provides jobs, and you can shut down coal, and you can shut down crude oil, and you can shut down natural gas. But that is dreamworld stuff, and that they have gained so much influence is very dangerous to ordinary life. So somewhere it's got to break in here where Canada should be allowed by the government in Canada to transport energy as most efficiently as possible from where it is to where it ain't. And where it ain't is in Ontario and Quebec, and they get their crude oil from some of it from Venezuela, and but there are people in that part of Canada who are adamantly against pipelines. So then you've got thousands more rail cars transporting crude because they've been unable to find a way to shut that one down, and transporting crude through rail cars is inefficient economically, and it's also very dangerous because you have many more accidents with rail cars than you do with pipelines. But I think most people are eventually positive, and I think most people will look at a blast of cold weather and say, hey, maybe these global warming people, with their forecast that kids would not know what snow is, maybe they're not so right. And then the public can also look at the passions for windmills and solar cells, that, hey, this isn't working. This is very expensive stuff. And here's the irony on this, Jim, is for each unit of wind turbines or each unit of solar power you put up, those are intermittent. but the demands for power are not intermittent. So each unit of renewable that goes up has to be matched with a unit of reliable power, either from electrical power generated either from natural gas or coal or uranium. And they just don't get it. And the other thing about these wind turbines is it requires a lot of sophisticated electrical stuff, including switches and everything else that requires some rare earths, and that's you got to mine those. So it's where upfront electricity looks good, but even for one tall wind turbine, you got to dig a hole in the ground 100 feet down and put a whole lot of cement. And how much power does it take to create cement? And it takes a whole lot of rebar. And how much does it take to manufacture rebar? So it's all very delusional and extremely authoritarian. But I think here now with this blast of winter would perhaps get some people questioning that theory. And then as they keep in Canada, particularly Ontario, and then soon in BC, looking at their electric bill and realize that, hey, this is all this airy-fairy theoretical stuff is very expensive. So I think we're close to, let's call it a new bull market for common sense, where people look at some highly inflated stories and say, hey, this is over the top, I'm not buying it. So what it is an understanding that these plans really are nothing more than in-your-face and in-your-wallet government intrusion. And I know myself, I've had enough of it, and I'm sure that many people, once they stop and think about it, will realize that, hey, it's just not worth it.
Well, take a look at Ontario, where they have sky-high electricity rates, where people literally are having to make a choice between buying food or paying their power bill of $900.
Oh, yeah, that's also the case in England. People are power poverty-stricken, and people cannot afford to heat their homes, and then you get another cold spell in England. They'll be reporting deaths due to exposure in their homes. So, gosh, it's... I think we live in very exciting times. But I'm the optimist, Jim. I think the public can see through it. And it'll be helped by when they look at their power bills. And it'll be helped when they look at the snow, when it was improbable to have snow. So, and this 2018 was an interesting year because it was 20 years earlier when the first guru of global warming, James Hansen, said that within 20 years, the summers in the Arctic would be completely free of ice. And yet, that is not the case. And you look at the chart now of the ice volume, and it's normal. But whereas 5 or 6 years ago, it was below normal. And they publish these charts on a day-by-day basis. So you're comparing this week against the same week in previous years. So there's, and then you've also got the satellite temperature recording, and it, after soaring up in 2016 with an El Nino, which is a weather event, it's been cooling, coming down, so that you're approaching the level that's prevailed for the last 20 years. It is more or less, if you took out the 2016 El Nino, you'd have a flat-lying curve, and it is now getting back to a flat-lying record of the satellite measure of the Earth's temperature. So it's going to be fascinating to watch. Perhaps the lows for this cold blast now are over. We'll have a warming bit, but winter isn't over yet. And
Well, Vancouver's expecting snow starting Sunday on and off.
I don't want to hear about that.
I was going to say Gregor Robertson must be out of town if there's going to be snow. Bob, thank you so much for chatting with us.
Jim, it's good to be on the show, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet, our YouTube channel, Talk Digital Network. If you have any questions for Bob or for any of our other guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.